There, guys. Hope you're doing well. So I wanted to put together a training about where is the market headed? So it's going to be a question that you're going to get asked when you are a real estate professional. People are going to want to know what's going on in the real estate market. And if you are a real estate trained professional, uh, you know to research this, have your information together, know what to talk about, make sure that you're able to educate your clients. So my name is Jennifer Kenna. I am a real estate broker team leader here in Florida and super excited to share some information with you guys. And again, this is the beginning of 2024. So the market is consistently changing, which is why people are going to ask you about this over and over. And we want to just make sure that you're doing your research and you have enough information to interpret for the customer. So why is everyone asking about the crash, right? We've been hearing now, I think maybe 10 years, all I keep hearing about from clients is, oh, the market's going to crash, right? That used to be a really big fear. Well, now this year, all we're hearing is when are mortgage rates going to go down? Now it's all about the interest rates changing and going down. So it's always something, right? The news is always looking for information. Real estate is very personal for people. It's their biggest asset in life. So it's something that, is when it's on the paper, people buy the paper, right? They're going to tune into the news channel because they want to learn more about it. So just know that this kind of constant flux is typical. And the best that we can do is just always study, do the best information that we can so that we can answer those really tough questions when it comes through from our clients. So I found some really great mortgage rate predictions, just going on Google and kind of looking at the sources. I have a few that I trust that I use more often than others, so that I really know that I'm getting the best information, not just scare tactics, right? Most of the news just wants to scare you so that you click on the ad. So when they were talking about when will the rates go down, start of 2023, the economists were predicting mortgage rates would gradually decline throughout the year. Well, we all know that didn't happen, right? So one of the really important things is if you're trying to convince somebody not to dictate their life by the chance that the mortgage rate is going to drop, just use stories. Tell them about last year that we heard the mortgage rates were going to drop. Well, that didn't come true. We know they actually increased. So rates trended higher during a peak of about 7.79% in October. So just so you guys have an idea, maybe the first of the year we were around 3%, then 4%, then 5, 6, 7. So you think people didn't regret when they thought 5% was high, when they thought 6% was high, right? It's almost impossible to perfectly time it. It's outside of our control, but also some people are just live in fear and then they don't make decisions because they're thinking something's going to happen or their friends are telling them something's going to happen. So don't dictate your life decisions by something that's outside your control. So the mortgage rates, they've pulled back since then. So they were at the 7.7 end of last year. Now they're probably about I think 6.8% is what I saw. So they came down, about 1%, which is substantial. That's big when you're talking about a 30-year mortgage. But looking back, kind of what happened last year, they were just wildly off base mortgage rate predictions. So I will go over with you guys what are they saying now, but I just always want to look backwards and say, what did they say last year and what actually happened? So keep that in mind. And a lot of this information is just a forecast. Take it with a grain of salt. And that's the advice that you want to give your customer as well. So if you're thinking about buying a home, you probably shouldn't center your entire home buying strategy based on speculation. Great sentence. It's definitely something that you should make sure you're conveying to your customers. Even the Fed chair, he said in September 20th news conference, forecasts are highly uncertain. Forecasting is very difficult. Forecasters are a humble lot with much to be humble about. That's a very telling quote there. So going into 2024, most economists agree that rates should decline somewhat at the start of the year and pull back gradually during each quarter to being about 6% by year end. So if right now we're at like 6.6, 6.7, and by 12 months later, maybe at a 6% by year end. So when you have clients that are not making purchases, that are saying, I'm going to wait and I'm going to rent another year, is that a really, really strong strategy? I would say not. I'm sorry, and I just realized I'm not sharing my correct screen. Okay. So I read some of this to you guys here, but just let them know that you got to make your home buying strategy has got to be more than items that you can't control, like interest rates. Don't wait to rent another year, lose $20,000 potentially, throwing away into rent just because you're worried about an interest rate, right? You got to live your life. So we want to make sure we're giving that information. So why are they expected to decline? So here's some information that I also received with the Fed in there, what they're speaking about. So stubbornly high mortgage rates in 2023 were a byproduct of the Fed's battle to bring down annual inflation. So, one thing affects the other. So to bring down inflation, now they're trying to raise the interest rate. So despite all the pressures of rising interest rates, there was a lot of people very upset, right? All of a sudden they were 7-8%. People were freaking out. The central bank raised the federal funds 7 times in 2022 and another 4 times in 2023. So this is happening all the time, right? That's why you have to kind of look daily on what is the rate today. But it's almost like checking your stocks every single day. Well, what is my stock at? What's my stock at? I mean, you're going to make yourself crazy. So you just have to have a strategy to just do the best for your life situation, for your client's best situation, and not try to forecast or wait on these types of things. So the tide turned in November. So with economic data came out on inflation and the labor market said we're having a cooling economy. I would definitely say I experienced that as a licensed agent. Being in the business at that time, things slowed down. Buyers wanted to wait. Clients weren't going to put their house on the market because they knew buyers were waiting, right? It definitely had a supply and demand effect as well. So during the Fed's January rate setting meeting, they voted again to hold the rate steady at 5.25 to 5.5%. And it appears the central bank has finished its tightening cycle. So they said another rate hike is not likely. And that was in December. Well, what happened after December? Right? They did another rate hike. So you just can't base it even on the information that the people in charge are giving us on the news, right? It just seems like it's such a unpredictable thing. So the Fed released its updated projections, which show 3 rate cuts expected in 2024. But again, are we going to wait and have our buying home decisions on what happens? I don't think that's a good idea. That's not a good strategy. So they said they're going to bring it down, but overall for the whole entire year, 3/4 of a percentage point by December 2024. So is that worth even waiting? Right? I don't think so. So the Fed's economic policy is not set in stone. If the economy begins to show signs of heating up again, they may adjust their path accordingly. So even just maybe if you give this information or share some of these articles with your clients, it just shows that we can't guarantee anything. And it'd be really, really crazy to make all your buying decisions based on that. So here's the forecast for the rest of the year and also into 2025 by all of the top kind of industry experts, right? Again, they've already said they have to be very humble because they've been wrong many times before, but they still put out their forecast. So they're thinking if we're at 6.6 right now in February, they're saying by December, around 6.1 is the estimate. And then by 2025, 5.6. They don't say when, just sometime before December, they're going to be down at 5.6%. No guarantees here. And then a couple other ones, 6.1, they think by 5.5. The National Association of Home Builders, the National Association of Realtors also has their forecast put in place. Realtor.com has their own guess, and then Wells Fargo has their guess. So they're pretty similar, but they're not anything that's earth-shattering. They're not dropping by so much that's going to make a huge impact on the homes that people purchase. So let's dive into these a little bit further. So Fannie Mae, they say that rates will decline to 5.8%. So this is where they're at. Their housing forecast, again, not set in stone, put the average 30-year fixed rate at 6.4 during the first quarter of 2024 and falling down to 5.8% by the end of the year. So that's December. This reflects a major downward revision in their forecast. So it means they didn't say this initially, but now they're saying it. Just 2 months ago, the mortgage giant did not expect rates to dip below 7% until the second quarter of 2025. So again, they've changed their tune. Now they're saying a different forecast. Fannie Mae predicts mortgage rates will average 6.1% in 2024 and 5.6% in 2025. So hey, as real estate agents, that's great news for us. We know as the interest rates are going down, it makes homes more affordable. But the other thing I want to mention is it also makes them harder to get. So we remember the pinch last year where we had no inventory. We had lots of buyers, qualified buyers wanting to buy at low interest rates, and they didn't have homes to buy. Sellers were not putting their house on the market because they didn't know where to go. So just know there's a big cause and effect. We love to have the cut in interest rates, but now there might be a demand in product. The prices for homes might go up again. So they're saving on the interest rate, but now they're paying more for the home. So we just have to really be as educated as possible to help our clients make good decisions. So inflation's decline and the resultant Fed pivots to signaling future rate cuts. It's leading us to believe home sales and mortgage originators bottom out the second half of 2023 and that a gradual improvement is now underway. So I saw this a lot on my social media, not personally. Our business was not affected. We were very busy, steady all throughout the year last year, but I did see other agents were hurting and I did see a lot of mortgage companies were hurting. So when the mortgage rates went up, all of a sudden people weren't refinancing, which is a big part of a mortgage company's business. So now they're starting to see things get better, starting to see things improve. So Doug Duncan, who's Fannie Mae's senior VP, we expect mortgage rates to dip below 6% by year end. So for home builders, we'll continue to add new supply, both of which should aid affordability. So again, they're not being held to any of their standards here. This is just their assumptions, and this is the information they're sharing out there with the public. Wells Fargo says they think rates will come down to 6% by the end of the year. So the economics group of Wells Fargo put the 30-year conventional mortgage at 6.8% the first quarter of 2024. They think it's going to decline down to 6.05 by the end of the year. So they're even thinking below 6% the beginning of next year, 2025. The residential sector looks to be improving as mortgage rates march lower. On balance, mortgage purchase applications have been trending modestly higher over the past several months, which suggests a lower finance costs are pulling home buyers back off the sidelines, right? So we're feeling that too. As real estate agents, I know we've been super, super busy the first of the year. The minute there was any sort of rate drop, we're advertising it. We're letting people know. A lot of people got back in the game again and we're ready to buy. So this is great. Let's say the NAR, this National Association of Realtors, they said rates will decline to 6.1%. So again, they're all pretty close in their predictions. The National Association of Realtors expects mortgage rates will average 6.8% the first quarter of 2024 and drop to 6.6% in the second quarter. And they predict it will continue to fall to 6.1 by the end of the year. Okay. So their chief economist there said during a November real estate summit, he thinks rates will be between 6 and 7 in spring of 24. I believe we've already reached the peak in terms of interest rates. So the questions are, when are rates going to come down? So everyone is really, hopefully, got a pretty positive outlook, which would be really exciting for us in the real estate business. Here's another company, the Mortgage Bankers Association. They're again at 6.1. They're predicting by the fourth quarter. So these are going to kind of start to decline, but very little. We're talking 6.8, 0.7% over an entire year. So, and then a little bit below the 6% in the first quarter of 25. We expect that this path for monetary policy should support further declines in mortgage rates coming just in time for the spring housing market, especially in Florida. We get a lot of people relocating when it's cold up north. They're coming here in droves. We are forecasting modest growth in new and existing home sales in 24, supporting growth in purchase originations following an extraordinary slow 2023. So things slowed down, but they have a very positive outlook. They're going to be growing the spring of 2024. Who else here? Oh, right, Realtor.com. So they're still at the 6.5%. We believe our policy rate is likely at or near its peak for the tightening cycle. The economy has surprised forecasters in many ways since the pandemic. The ongoing progress toward our 2% inflation is not assured. We are prepared to tighten further policy if appropriate. So again, they're leaving this very, very open that things can change at any time. And inflation is going to be the thing that's going to dictate our interest rates. So it's just a very fluid number. So we don't want people to base their life's decisions on something that is so clouded, right? It's something that nobody can control. It's not like they're going to go to one mortgage banker and they're going to give them a better rate over somebody else. This is across the board. So, so here's some just different projections here. Another reason why mortgage rates expected to fall is the abnormally large spread between the 30-year fixed mortgage and the yield on 10-year treasury bonds. That spread is historically around 170 basis points. It's closer to 300 throughout the most of 2023. So even the treasury bond market is even affecting where interest rates are at. Treasury yields have moderated over the past month, and if spreads return to normal, then mortgage rates should be under 6%. So it sounds like they got a long way to go. They're at 300 points. They got to get down to 170. Who knows how long that will take or if it will happen. So what should buyers know? So this is really important. So as we're educating, provide resources, you don't have to be the interest rate guru. We're not in the mortgage business, but we know the mortgage business really drives our business being realtors in the business. So you want to just let them know that prices may not fall. So just because those interest rates might come down a little bit, it's cheaper, easier to get the loans. There might be overpaying for homes. And we've seen this happen in the last couple of years. So falling mortgage rates will ease some of the affordability constraints. So first-time home buyers, retired people on fixed incomes, it's going to make it a little bit easier, more affordable to purchase homes. But in other good news, home prices are expected to stabilize this year, but buyers should not expect them to come crashing down, right? So some people were saying, I'm waiting for the crash. I can't tell you how many of my clients said, I wish I would have bought sooner. Now they have big time regret. Jen, you were right. I should have bought. Okay. So just knowing there are a few 2024 home price forecasts from top housing economists. Fannie Mae and Freddie Mac, we know there's some really big ones. They say average national home prices will rise 3.2% in 2024. So if somebody is waiting for their interest rate to go down 0.07 over a whole year, meanwhile, they're going to be paying 3% or more for the house that they wanted. Okay. And then in 2025, they see that going up even more. So Freddie Mac home prices will grow 2.8% and 2% in 2025. NAR, the median home price will increase by almost 1% to 389,000. I think that's all across the country. We'll talk a little bit more specialized in our area. And what does that median home price look like? Realtor.com, the median existing home price will fall this year after staying flat in 2023. Where do they come up with this information? It's very different here. And then Zillow says home values will be steady this year, decreasing by 0.2%. So that may not even be a number that we really see. So home prices are not likely to drop nationally. It's still positive that they're not likely to keep rising at double-digit pace. So back in 21 and 22, we were having 50, 60% price increases. I mean, a property that was 250,000 was selling for 500, 550 all day long. So that was a huge double-digit jump, but that's out of the ordinary. Should not happen. So there might be small little incremental price adjustments, which is good. We call that appreciation for people that purchase homes, but they're not going to have that over-the-top bidding wars to drive home values through the roof. So that's great. Buyers can also expect more properties to choose from. So now there's more inventory. They have more options, which is another thing super important to our buyers. Now, that's not to say it's going to be a buyer's market. There should be at least some more balance between buyers and sellers. So buyers may not be able to close the deal without having to waive some of those important protections. So home inspection, appraisal contingencies, their home selling before they buy, a lot of those things might still be on the table for buyers because there's not a huge shift where they're, able to negotiate as much as they want on homes. Existing home inventory is forecast to improve, at least marginally, as rates drift lower and some previously rate-locked homeowners decide to sell. So there's lots of sellers right now that would love to sell their home, but they have a really low interest rate. They have a 2% or 3% interest rate they've had for 5-6 years. They're deciding they don't want to get a new loan because they don't want that number to double. So there's lots of sellers on the sidelines. They love to sell their home. They want to move. They have a need to move, and they're actually sitting back and waiting for interest rates to come back down. Buyers may find less competition in the new home construction market. It's another benefit. Homeowners might be more reluctant to sell to sacrifice their low mortgage rates they have, but home builders remain eager to close the deal. They don't want to sit on a lot of properties. It doesn't look good for their shareholders and their numbers if they have a lot of empty houses. They usually like to build by contract. They don't even like to have inventory homes. So there's going to be lots of opportunity for people that want new construction to get into this business right now. So new construction homes are typically more expensive than resale homes. In our area, not so much. There's lots of very affordable builders. So builders may be willing to offer concessions like price reductions and interest rate buy downs. So we're seeing a lot of that right now. So share that good news. Instead of always having a lot of negative, bad news, this is all good news for someone looking to buy. And lots of customers want new construction. There's not many people who go, oh, no, I want an old house that's got lots of repairs needed. People love the idea of having a new construction home. So what sellers should know, and this is interesting because the same people selling their homes are turning around and buying other homes. So they're buyers and sellers. They should be able to think from both sides of the hat there. So perhaps the biggest hurdle facing sellers is they still need to find a place to live once their home sells. So that means buying a new home at today's rates and today's home prices, right, which we know are going to be higher with new mortgage rates when they might have a rate currently like around a 3% or below. So some homeowners simply don't want to take on a 6+ mortgage rate, and some can't afford to. So they're going to stay in their home a little bit longer. Many prospective sellers are going to be hard pressed to give up that 3% mortgage rate. So Zillow predicts that rate lock-in effect will wear off somewhat this year as the homeowners just get tired of waiting. So we call it the cost of waiting too. So living in a home you don't want to be in, your wife is unhappy, your children are too big, you need the third bedroom, like life is happening. So you're either going to just continue to sit back because you're living in fear, or you decide, let's go ahead and make that decision. They get tired of waiting on the sidelines. So we think that's going to happen a lot this year. So don't give up on your customers you might be talking to before. Maybe 6 months ago, they said, no way, we're not buying, we're not selling. Things change. People get fed up from waiting as well, especially when there's no guarantee like interest rates. A recent study suggests low rates aren't the only factor keeping people from selling. A fifth of mortgage borrowers say that the low mortgage rate is causing them to stay in their house. Nearly as many said they simply like their current home, but unsurprisingly, 13% say they're put there because home prices are too high to buy another home. So they don't even want to live there anymore. They've already kind of checked out on the place. It's not their ideal. It's not meeting their needs, but 13% are just worried about having to buy their next home. So if you can help somebody who's looking to sell their house, maybe get into new construction, maybe do a rate buy down. They can buy something brand new at a very affordable price with some concessions. That's going to be super, super attractive for them, and it's going to motivate them to sell the current home they live in. So there is a silver lining for sellers who are also buyers. Most homeowners who have been in their current home for at least a few years are sitting on a mountain of equity, right? So that's good news too. Thanks to the double-digit home price appreciation during 21 and 22, now they can actually tap into that equity to put towards their next home purchase. So maybe they're anxious and nervous that their new home is going to cost more, but now they also have an extra 200, 300,000 in their current home that if the market wasn't going up as high as it was, they were never able to have that kind of equity, right? So there is a cost benefit there for their new home purchase. What about refinancing? So this isn't a huge concern for ours because as real estate agents, of course, we're not helping people refinance their homes. We can refer them to our mortgage broker if we think that's in their best interest. But that's going to be another thing to really discuss. So the forecast for mortgage refinance rates is the same as the forecast for purchase rates. They're likely to decline this year, but they will not return to the pandemic era lows. That twos or threes is off the table. So if anybody's saying, I'm going to wait until it goes back to a 3%, man, they're going to wait a long time. So we don't want to encourage somebody to do that. We are seeing a little bit of a rate decrease, but not where they were before. So it really doesn't make sense to try to refinance for a lower rate right now for someone who's just looking for a refinance option. Now, the exception would be home buyers who borrowed when mortgage rates were at their all-time high. So if you had clients that did buy in October, November, December, and it was at a 7 or 8%, it would make sense for them to refinance now that we're down to the sixes. So the vast majority, about 84% of Americans who bought a home in the past year plan on refinancing. So that's a huge number, right? These are all of our customers we sold last year have plans to refinance. So why don't we be a resource for that and make sure we're referring them to one of our partner lenders because we know that's a need that they're going to have. So most of them plan on waiting until the rates drop below 6%, which will feasibly happen by the end of 24, with about a fifth of them waiting until rates fall below 5%, which we know is going to happen over the next 3 years. So if somebody's asking you this kind of information, you want to make sure you have enough really good data to share with them. It's possible to refinance if your goal isn't just to get a lower rate. So some people, when you refinance, maybe you can get a shorter repayment period going to a 15-year mortgage. Maybe someone's in a adjustable rate. They want to get into a fixed rate. There's lots of reasons why people might refinance. Maybe they want to cash out some of the equity they have in their home. So some other strategies will help them pay off their mortgage faster, save them a lot of money in the long run, and make fewer interest payments for their lender. So different options we want to make sure that we have for our clients. Here it is here. Others may want to refinance if they're adjustable rate to a fixed rate, which I think that would make sense. And then some people want to cash out refinance. So what does that look like? I'd like to really give examples of what does it look like for this to drop. So how much does the interest rate actually affect our customers' payments? So if we're going to say we're at 6.8%, I think it's actually a little bit less than that, but I went on the high end. So the beginning of January 2024, it was at 6.8%, and they expected a drop of 6.4 sometime this summer and 6.1 by the end of the year. So I did a little calculator here. I said, all right, let's just grab an average price point, 300,000, 20% down, 30-year fixed at 6.8. The payment with insurance, taxes, payment and interest, 2,000 a month. If they waited until it went down to 6.4%, so let's say they wait 4 months, 5 months, it would actually drop their payment to $1,943. So the difference between 6.8 and 6.4 is about $50 or $60, right? So that's not a huge, huge gap where they're deciding not to move or live in a home that they hate. over just a little bit of a savings there. But let's say they waited from January, it was 6.8 to 6.1 by December. They waited a whole 12 months to see what happens. If it did drop down to 6.1, which again is not guaranteed, if it did, their payment would go from 2,000 to 1913 for the same home. So is there a savings? Yes. Is there a savings that's going to change their life, change their world? No. So if January, there's not as many buyers in the marketplace, there's not as much demand, there's a lot more inventory, they can buy the house they want for 300. If they decide to wait and they save just to save $80 here, $80 a year, maybe $1,000 for that year, and decide to buy near the end of the year to save that money, that same house might be worth 325 or 330 because now with the low interest rate, there's more buyers in the market. It drives up the price of the home. So is it worth paying 25,000 more for the house to save $80 a month? I don't think so. So I think all of this is really valuable to have these type of numbers so that you can speak to what the difference looks like. And we want to make sure they're making the right decision. So 2025, they estimate the interest rate could be 5.8%. Always remember to share with our customers. It's not guaranteed. It's just always better to make the decisions that work for your life, not waiting on what the environment's going to do. So if somebody decided to go and buy a car, I have never shopped for a car based on what the interest rates are. Maybe I'm the only one, but I might look at the price of the car. I might want to test drive the car. Does it have the features that I want? Is it available in the color that I want? Maybe the options are really important to me, but I'm not really choosing my car based on the interest rate or where the interest rates are at. But for some reason, it's a really, really hot button when it comes to mortgages. So here's another one. Let's say 2025. So they wait an entire year or more, year and a half, just to wait for the interest rate to go to 5.8. Again, 2,000 a month, they're going to go down to 1851. So it's not life-changing numbers that we're talking about here. So in my mind, I always want to do what's going to be best by the client, not saving $150, right? I don't think that's a night out, on the town with a bottle of wine. People every day decide to spend $150 more at the grocery than maybe they need to, or going out to dinner or maybe traveling. So people spend this money every day, all day. The benefit with their interest rate is it is tax deductible. So it's something that, if they have a job where they're able to write off their interest, there's a benefit even to the interest that's being paid to their mortgage company. So don't get overwhelmed by this. Again, I just want you to have enough knowledge so that you can speak to it when people are talking about being fearful. Put the numbers together. Most people are fearful when there's something they don't understand. It's the unknown that is scary. When you make it, well, it's going to be $100 difference to wait a year. Maybe they're going to go, well, I'm going to pay rent. I'm going to pay a lot more than that. Let's go ahead and move forward. So I put an example together for a rental. So let's say that there's a customer out there because it's actually a real life situation. This is my brother. Him and I just went over these numbers because he wanted to wait until interest rates went down. So he's renting at $1,500 a month. Rent prices are through the roof as well right now. So if your clients are telling you they're renting, ask what their rent is. I think you'll be shocked to hear what rental prices are because as soon as home prices went up, rental prices went right up with them. So he's paying $18,000 a year, which is just a loss, right? That's a place to live, but it's a bill that you're never getting any sort of income back. You paid it to someone else's mortgage. You're giving that to an investor. So to purchase a home, sure, you need a down payment. So let's say he went to buy something for $200,000 at a 3% down payment. He had to have $6,000 saved. When you go to do a rental, they're asking for 3 months payment. You got first month, last month security deposit. So the same money that you can put down to purchase a home is about what you're putting down to lease a home today, right? Some people don't know that. They think they have to put down 20%, 25%. The more they put down, great, but don't let them hold them back and keep renting versus just being able to put down that $6,000. So then his mortgage payment, we did end up finding him a property, was a condo. So it did come with a pretty high $500 a month condo fee. But even at that price, I think his principal interest was $1,100 a month. His mortgage here with the taxes, insurance, and the HOA fee, $1,700 a month. So it's a little bit more than what he was paying, but this was all a loss at $18,000 a year versus now he owns something. He's got something he can actually appreciate, put money into. He's excited about painting and putting new floors and, making it his own home. So number one, it's going to appreciate. The average is 6% per year. Like I said, 21, 22, we were double digits. I mean, it was insane how high properties went up. So we don't expect that to happen. But let's just say 6%, which is a pretty conservative number per year over 3 years. The house he bought for $200 now is worth $236,000. So that's 36,000 that he's got in appreciation by owning a home. That's pretty substantial. Some people, that's their, takes them 12 months. That's their annual income, 36. So there's also tax savings. So all the interest he's paying, he's got some tax deductions. So that's a big benefit. Instead of having to give it all to the government, he can write off some of that interest there. Paying off the mortgage, let's say he pays it off sooner. So we always suggest this to our clients. My husband and I have always done it, even if it's $500 more a month, even if it's $200 more a month, that's paying off your payment directly. It's not going towards interest. So it's going to help you pay off your mortgage within half the time. So 15 years versus 30 years by making a little bit extra payment. So he's going to benefit even more from this property than having to wait 30 years to pay off that mortgage, and also possible rental property later. So he's got a home he can live in. Let's say he lives there for the next 10 years or whatever. Life happens. Maybe he wants to move sooner than that. He can actually rent it out. So it's still an asset that he owns. Plus he gets all of these other benefits. So if anyone's trying to decide, should I rent, should I buy? It's very, very easy to make that decision. We just have to make sure we're educating people on what that numbers look like. So should your clients wait? Since we're licensed real estate agents, should we let them wait? First, it goes back to their motivation. Why are they buying? Why are they moving? Why are they buying? What does the new house have that their old house doesn't have? We want to find out what those pain points are, because then we can really make a decision. If you're going through a divorce, do you want to say, well, let's wait till the interest rates go down. Let's just stay living together for the next 12 months. What could go wrong? Right? For failed marriage. No, they have a strong motivation, strong pain point. They need to get the home sold versus waiting. We also call it the cost of waiting. So let's say rates go up, not down. They're estimating they go down. What if they don't? I can't tell you how many clients, as soon as the interest rates went to 4%, 5%, were mad. Oh my goodness. Can you believe it? They were 2, now they're 4. Now they wish they would have bought it 4 because now they're 7. So there's no guarantee. So there's so many people, we call it the cost of waiting to see what happens. Sometimes those rates don't come down like they expect. They could miss out on the perfect property. You find them the house they're looking for. Everything checks the boxes. It's perfect. Their son's going to love it. It's close to the school district. They got the master bedroom they've always wanted, the big closet, the big backyard for the dog. And then they miss out because they decide we're going to wait. So we also consider that the cost of waiting, missing out on that perfect property. They look at other properties and all they can do is compare it to the one that they lost, right? We don't want to have our customers go through that pain. They can continue renting. I'll just rent. I think I gave some pretty good background there. So if somebody wants to consider renting, there's absolutely no benefit in that whatsoever. They're also thinking in fear instead of faith. So I hear this a lot, like, what if, what if, what if? That's just very much thinking in like scarcity and living in fear. Nobody wants to live in fear. So I always try to let people know that things always work out. So if the right property falls into your lap right now, even though you told yourself you weren't going to buy for 6 months, it just could be part of God's plan. Things are just falling into place for you. They're easier than you thought they'd be. The house came up sooner than you expected, right? All that stuff happens. Things just seem to work out in the best time, not what we think is the best time. It's also fun to be the positive bearer of good news. We don't want to, they're getting a lot of negativity already. Let's turn it on all the good news, all the things that are exciting, the exciting things of home ownership. My little brother says he can't sleep. He's so excited to have something that's his. He spends his nights and weekends with his girlfriend looking up furniture and things that they're going to buy and where they're going to put things. Right? That's exciting. That's exciting time. Does not need to be a stressful time waiting for interest rates to fall. We also like to share stories, give examples of clients who waited and regretted it, because we don't want people to make the same mistakes. So if I'm your professional advisor, I want to tell you all the other people I know that said, Jen, we should have listened. We should have bought when you suggested. We should have bought that house that we missed out on because we waited an extra couple weekends and someone else bought it. Someone else is now living in my dream house, right? That's painful. It's an emotional thing. So share stories. So anytime you've had somebody that missed out on something, let's make sure your next client doesn't also do the same thing. And we always want to do what's best for their situation. Get to know our clients. We always sit down and we do full buyer consultations to ask a lot of those questions. Why are they moving? We want to really understand their family, their, what do they do for a living? All those things are going to be a really big deal to help advise them on the best situation. So there's lots of times I've had to tell a buyer, I don't think it's a good time. When I'm learning more about them and where they're at, maybe they're stretching themselves too thin. Maybe they're jumping in before they have the job. All kinds of things that people do. Sometimes it's better to advise them not to, but then there's lots of people that just wait years and years before taking action. It hasn't got painful enough that they've taken the first step, but doesn't mean that they shouldn't. Doesn't mean that they're not going to regret it later or that they missed the boat or they missed some sort of opportunity. So by really understanding your client, really caring, listening with your ears and your heart, and being able to advise them on what is the best situation or best advice for their situation. And lastly, just remember it's easy to procrastinate. A lot of times that's easier than making decisions. I don't know yet. I'm not sure. I can't decide which area. I don't know which beach I like better. They're kind of just so it's easy to just not make any decision and just procrastinate. So we don't want our clients to do that. We want to make sure they have all the information they can to make the best informed decisions and not live in fear. Don't live in fear of interest rates and things that are outside of our control. I think it's important that we know they might be making a reduction this year. That's awesome. Anybody that decides the first quarter they're going to wait till the end of the year to make a purchase, no problem. We're still going to be in business then. We'd love to help them when the timing is right for them, but don't let certain people just use it as an excuse. So thank you guys so much. I appreciate you guys hopping on. There's lots of other things that our other videos can help you guys on. So any questions you have, please reach out. I am available. Love to help real estate agents do the best job they can and become that ultimate professional that you know that you can be. Thanks, guys. Have a great day.